All right, let's jump right into it. We're breaking down Cango Inc's Q2 2025 earnings report today. And listen, this wasn't just your run-of-the-mill quarterly update. No, this was a huge one, the first full quarter since the company completely reinvented itself. We're talking a massive strategic pivot here. Okay, so right off the bat, we've got a real head-scratcher. On the one hand, Cango reports this massive loss. We're talking nearly $300 million. Ouch, right? But then, what does the market do? It completely shrugs it off. The stock actually jumped over 6.5%. So, a huge loss, and the stock goes up? That's the kind of thing that makes you go, and that's exactly what we need to figure out. So, the big question is, what did investors see that the rest of us might have missed? Something made them look straight past that giant red number and hit the buy button. Let's peel back the layers and solve this thing.
All right, let's get into the nitty-gritty. First up, we're going to decode that earnings report and figure out what's real and what's just noise.
Okay, so let's just put it out there, that big, ugly number. $295.4 million in the red. I mean, on the surface, that looks absolutely disastrous. You can see why the headlines probably screamed bad news, right? But, and this is the key, this loss wasn't because the business is falling apart. Not at all. It was all about two very specific one-time accounting things. First, they took a hit from selling off their old business in China. That was a strategic choice, part of their big pivot. Second, and this is kind of funny, they had this non-cash charge. Basically, they paid for new mining equipment with their own stock. And because their stock price doubled, accounting rules forced them to report a bigger expense. So in a weird way, they got dinged for their own success. The important thing is both of these are in the past. They're done. Okay. So, if you ignore all that one-time noise, this is the number that smart money was looking at. Adjusted EBITDA came in at a super healthy $99.1 million. Now that tells you what's really going on with the actual business. It's a completely different story, a much, much better one. And what is that core business? Well, take a look. We're talking about almost $140 million in revenue, and pretty much every single dollar of it, over 99%, came from Bitcoin mining. That old auto trading business, it's basically a rounding error now. Make no mistake, Cango is a pure-play Bitcoin miner through and through. And this whole shift didn't just happen overnight, but it was pretty darn close. We're talking about a ridiculously fast and aggressive pivot into Bitcoin, a complete company makeover in just 9 months. I mean, just look at how fast they moved. It all started last November, when they began buying up mining power. By May, boom, the old China business is gone. And then by June, just a month later, they hit an incredible 50 exahash of capacity. That's not just big, that puts them right up there with the biggest names in the world. We're talking an insanely fast, super aggressive, and so far incredibly successful transformation. So how on earth did they pull that off so quickly? Well, it all comes down to their strategy, what they call an asset-light model. Think of it this way. Instead of spending years and a ton of money building their own facilities from the ground up, they went out and bought plug-and-play mining rigs that were ready to go. It lets them scale up super fast without a massive capital investment. Now, the flip side is that cash costs can be a bit higher, but they save a ton on depreciation. It's a trade-off, really, a strategy that's all about speed. And the result? That massive number, 50 exahashes per second. It's hard to even wrap your head around how big that is. An exahash is a 1 with 18 zeros after it. Calculations per second. It's just a mind-boggling amount of computing power. And having that much power means Cango isn't a rookie anymore. They're playing in the big leagues now, right alongside the most established miners out there. And to give you even more perspective, that 50 exahash, that's roughly 6% of the entire global Bitcoin network. Just let that sink in for a second. One company, after just 9 months of changing its business, now controls a huge chunk of the most powerful computing network on the planet. That's a big deal. But here's where it gets even more interesting. The story, and what got investors so excited, doesn't actually stop with Bitcoin. No, their long-term vision is much bigger. It's all about AI and energy. See, they're not just building a mining company. They're building what they call a dynamic computing platform. So management laid out a really clear 3-step plan. Step 1, for right now, is just to squeeze every bit of efficiency out of their current setup and lock down cheap energy. Step 2, the medium-term plan, is to start playing with renewable energy and getting their facilities ready for high-performance computing. And then Step 3, This is the long-term vision, the real game changer. They want to build a platform that can literally switch back and forth between mining Bitcoin and handling AI jobs, depending on whatever is making more money at that moment. And the CEO, Paul Yu, he put it perfectly. He said they're building a platform to basically play the middleman between the two hungriest computing industries on Earth, Bitcoin and AI. Think about the flexibility that gives them. It's not just about mining anymore. It's about owning the raw infrastructure, the massive, power-hungry computers that everyone's going to need. Okay, so now that we've unpacked all of that, let's get to our take. You know the drill. Here at Talk Tickers, we're going to give you our prediction for what's coming next. So what should we be looking for in Cango's Q3 numbers? So here are our projections. First, let's talk Bitcoin production. In Q2, they mined about 1,400 Bitcoin, but remember, they weren't running at full speed for that whole quarter. Now that they are, we're projecting they'll pull in around 1950 BTC in Q3. Now, what about costs? Their all-in cost per coin was pretty high in Q2, almost $99,000. We think that'll come down a bit, maybe to around $95,000, thanks to their new site in Georgia. But we don't expect a huge drop just because things like the global hash rate are working against them. All right, so that all brings us to the bottom line, our final rating. We're initiating coverage on Cango Inc with an outperform rating. Look, the market got this one right. You have to look past that messy headline number. When you see the clarity of their strategy, the insane speed of their execution, and that huge potential with AI down the road, it's a really compelling story. Yeah, we'll be watching those costs closely, for sure. But we believe this aggressive pivot has put them in a prime position to really win in this space. You know, Cango's story really shows that sometimes the biggest numbers to watch aren't on the balance sheet, but in how fast a company can completely change its identity. The big question now is, can they keep up this breakneck pace as they shift from just mining Bitcoin to becoming a major player in AI? That's going to be the real story to watch. And as always, please remember, this is not financial advice.